Hey everyone, welcome to the KE Report, another daily editorial. Now talking with Joel Elconin, co-host of the PreMarket Prep Show. Also check out the PreMarket Prep website to stay up to date with what Joel and his co-hosts are talking about, what they're trading and what they're watching on a daily basis for these markets. And I want to start off with a bit of a dive into the markets because look, you look at the broad averages, and those honestly have topped about a month ago in the beginning of December. It's been choppy action, and any major drops so far have been bought back. But today, to end the week, is another good example of weakness for these markets. Anytime the markets are trying to be bought back or any weakness is bought back, it is again being sold into. Bit of a different narrative here, but look, maybe that's just because the markets were on such a sugar high to end last year, all on the back of the election results. So, Joel, what's your takeaway from the markets? Not just how they're starting this year, but how they ended the year. And again, this lack of upward momentum that almost seems weird for these markets considering the last couple years.
Good afternoon, gentlemen. Thanks for having me on this Freaky Friday, I guess you could call it. Boy, oh man, your introduction was very good. It brings up a lot of factors here. I think the first factor to bring up, and maybe what I talked about last week, is a lot of people didn't want to sell before the end of the year, right? They didn't want to take those tax gains in the year of 2024. They were going to wait to see what the market did in early 2025. And it started out okay. It didn't start out great, but volatility picking up, right? The tradition of leaders to laggards to leaders, that trade is starting to come to fruition. But I think that the thing today that what's hitting the markets is, hey, the punch bowl got knocked off the table, spilled all over the place, and then the Fed doesn't look like it might even come to the rescue and lower rates in this year, let alone in 2025. And you're back early last or the middle of last year. You had expectations of 6 rate cuts, and now the economy is telling you that we're strong. That's not going to happen.
Well, Joel, to that point, we saw the jobs number come out a lot stronger than almost anybody was expecting, and a lot of it was led by the private sector instead of the government sector. So it's actually good news being bad news because of people's expectations for that prolongs the need to do more cuts. When you look at inflation, we get those numbers next week, but all expectations are for a slight tick higher, and we've seen a slight tick higher in inflation lately. So with inflation creeping up and jobs looking good, the GDP looking good, the economy looking strong, what impetus does the Fed have to really cut?
Yeah, you're going from a reflation, right? Things kind of like calming down a little bit. And now you're going towards inflation, right? Now you got the risk of the short bond going to 5.5%. It's turning into more of just a risk off market. And then don't look too far. The biggest components of inflation, energy. I mean, look at crude. You can't be happy with what the crude's been doing and the implications of that. That's had a big move looking at the USO since early December. Cold snap, cold weather. I'm sure you guys know about that. I mean, UNG making moves here. So there you go. I mean, all of a sudden, it got down to got close to 2%, got sticky near that area. But boy, now it's starting to turn up. And that is not what the investors want. That was not figured in it's almost the opposite of the outlook that they had. Once again, I'm going to be more the camp of stable for longer as opposed to like, yeah, we need to get down to 2% or we're never going to get back to those ridiculous low rates that we had, back pre-COVID. And, right now, I mean, I've always said, oh, I don't think we're running to 7%, but, first things first, 5.5 on the 10-year, and who knows what the government. We're going to get some inflation numbers in the middle of the next week, and that'll be a good indicator. But the reaction to that number today was immediate and decisive. And also the volatility picking up. You guys know that I like to keep the volatility. That's my indicator. Things can't go up when things are volatile. And then the other thing that I'll mention, and this is probably as far away from true market mechanics, but What a weird trading cycle we've been in, right? You had Christmas Day on a Wednesday, you had New Year's Day on a Wednesday, right? Midweek. Then you had the day off for yesterday for the observance of Jimmy Carter's death. So has to be a flow to the market. And that flow, just because of the way the holidays were with the Jimmy Carter Remembrance Day, then you have President's Day coming up. I mean, the market has to ebb and flow. There's probably no historical indication for it, but it's disrupted the flow of the market. And I think that's one thing that's contributed to the volatility.
That's an interesting comment there, Joel. But hey, we have seen the VIX relatively higher. I know it's not spiking, but that higher VIX that stays there, I think that does show that people taking a little bit more of a defensive tact. But again, we need to realize here that the S&P, it's down not even quite 5% from a month ago. All everyone was talking about is how 2025 can't be as good as 2024 or 2023 because of how strong those markets were. So how do you balance out if this is just a normal correction that will be bought back or if this truly is something more?
Well, I know that back-to-back years of 20% is not normal. I know that 40% of gains in my portfolio is what I look for over a 5 or 7, 8 year horizon. And so, am I calling for a 5 or 10 year top? Well, the farther you get away from that all-time high, the more that you build resistance. So I'm getting more and more convinced that the sell-off that we're seeing now, it's just the tip of the iceberg. And if you've been in these markets for a long time, sitting on gains, I mean, you can look at any chart. I've said this once, I've said it 1,000 times. You have to look at this from a perspective of where you're at in your investing horizon. Young guys like you, you could keep pouring the money into the market or being diversified. But you're an old guy like me, you got to look at where you're at, where your expenditures are going to come. And historically, I mean, we're still at the all-time high. I mean, we're still right up there. So it's not too late to, do re-asset allocation, but the farther you get away from the highs, the harder it makes to get back up there. And now, 5,900, I mean, we're about 300 handles off that high. That's going to be a tough road to hoe to get back to those all-time highs. And I'm pretty comfortable saying maybe we won't even see those highs in December and might not see those highs for a couple years.
Well, Joel, it's going to be interesting to follow along with the major indexes to see where they go in the year to come, but not off to a rocking start. And maybe that was the high point. We'll just have to wait and see. But even then, within the market, there's still pockets of opportunity with individual companies. And you follow a lot of individual companies as far as their earnings reports and the market reactions to those earnings reports. We teased that was coming in the last episode, and here it is. We're starting to see them. Any of them that really catch your attention from this year's Q4 earnings?
Well, just right out of the gate, Walgreens Boots Alliance, one of your worst performers in the market. Just think if you bought your Walgreens back in early 2015, you paid over $90 for it, right? You get down into single digits, down the $8, $9 area. So you talk about a laggard. There is not even a laggard for this year or for 24, 23, 22. Didn't have a bad year post-COVID. I guess everyone was going out to get their COVID drugs. But, a good earnings report. It wasn't a great earnings report. But money managers on days like this, if they're looking to something to buy, there was a catalyst. Also, it's a lower price stock, right? Well, it was $10 yesterday, $9 yesterday. The memesters can get involved in this one. So that's having a big move. The other earnings winner is, Delta Airlines. Good numbers. People are flying. I would just be I'm looking at their biggest cost of crude and their component. So I'd be a little bit skeptical of that. But, your steel stocks have shown a little bit of life. They've been your laggards, your energy stocks, poor performers in 2024. They were still up slightly on the year, but way off their high. Biotechs that are just so dependent on lower interest rates. They got a little bump at the beginning of the year, showing some weakness now. And then the other thing, your small cap dogs, we waited forever, makes that new all-time high in November, but the aura of rates not going up anytime soon. Your IWM is getting waxed today.
So, Joel, is this going to be the rotation then, as you're mentioning to us off mic, of leader to laggard? It's one thing that we have seen in these markets where the underperformers, sometimes money flows back into them. And, well, we have seen a big rotation trade. So, Walgreens being an example of that. Is this, again, a laggard moving to a leader?
You can run them. You can try them. You can play them. But I think that and when is the value trade going to come back into play, right? Some of these value stocks have something, like your energy does fit that bill. Gold and silver or something that could be a hedge. Never been that good on Bitcoin, but I would say either cash, or if you're playing some of these laggards, then have a plan, right? Have selling the momentum, buying on weakness. Don't be chasing them. So let's see if things come back into the value arena. It's been growth for a while. And I think also you just got to keep an eye on, your Mag 7. Those are a big chunk of the market. They're all getting hit today except for Meta. The run in Tesla, it's just been absolutely, mind-boggling. So you got some resistance there. And then also, the one leader that I'd be cautious with, and it was just short term, is these quantum stocks. They just had unbelievable runs and they came back to earth yesterday. But yeah, I wouldn't be chasing leaders to laggards. Be diversified and don't worry about, putting your money in cash or, because you can't get some yield.
Well, Joel, just to that very last point, that's exactly what I was going to ask you. We've talked about that with you on the show before, that for so long, for almost more than a decade, investors couldn't make any yield. Now with interest rates creeping higher and higher in a year that everybody expected there to be a lot of cuts and for rates to be going lower, you can still get 4.5% to 5.5% in a money market. Could that take money out of the market that rings the register on some successful trading years and then stores it on the sidelines and makes 5%?
Why not? Why not? I think that's definitely going to be alternative, and I think that's a trend that you'll see. And right now, people are going to see. I don't know if they're going to really do another pivot and say that they're going to take rates up, but they've already taken the first step, right, in saying that we're a little bit more cautious. Listen to Powell. Listen what he has to say. In 2022, he said rates are going up and market's going down, right? You got the turn in 22, got the market up at 23, just kind of, waiting for the pivot. 24 was unbelievable on the anticipation of rates. But I think you have to have the mindset that, you're not going to get the catalyst for the market from lower interest rates.
That's the key driver, I think. And you are right. Powell has been saying that. Yes, the Fed came out strong, but quite frankly, they have slowed it down from their first rate cut, and now it doesn't seem like we're getting much more, at least early on, even in the first half of this year. Quick comment on commodities. You mentioned very early on crude, natural gas moving higher, how that could be an issue for the inflation data. But look, we've also had gold higher, silver's higher, copper's bounced a little bit, all in the face of this screaming high dollar. Any correlations here that you can draw?
No, that a lot of these things have broken down, and I think it's just a little bit more of the safety trade. So inflation, with that the crude and the big components, I think people are still looking at the metals as a hedge. Actually, I just looked at the GLD chart here, and you had a really solid run. Right from August of last year, then peaking close to 260. And with every move, there's a counter move. And you had that counter move down to the 236 area, and now you're rebounding. So may not be a bad place to put a few dollars here especially if you're worried about the stock market.
Well, Joel, as you look ahead, obviously we got inflation next week, but there's still a lot of earnings reports that are going to keep trickling in. Any big ones that you have on the radar that you think investors should look out for?
I mean, you have J.P. Morgan next week, and then Netflix, and then I think it gets all into the big guns. I think if you're a headline trader, be careful. They may come out with the beat and the beat, but then keep an eye on the guidance. So I think the actual guidance is going to be much more key than whatever the earnings are. If companies want to lower expectations, there's no better month than January. In fact, if for the entire year of pre-announcements, 26% of the pre-announcements of earnings, either good or bad, take place in January, and we're coming up into the heart of January.
So interesting, Joel. That's a great way to end this. So get ready for some downgrades. Get ready for some companies saying things aren't going to be that great. But, well, we've seen how that's worked the last few years. Just an interesting way to start this year. But as you even said, it's been choppy for the last 3 weeks. Next week, hey, we're going to have a full week of trading. Let's see what comes out of that. Again, Joel Elconin, co-host of the PreMarket Prep Show. Click that link in the show notes. Joel, thanks for sharing some of your thoughts with us today. I hope you have a great weekend.
All right. Thank you.